Hey everybody, Dr. Tom Carr here, aka Dr. Stoxx of drstoxx.com, drstoxx.com. We've been in business since October of 2002, offering trading advisory letters, trading manuals that give you trading systems that you can trade for yourself, and trading webinars to give you the skills that you need to trade profitably. And then we also have two live rooms. This is coming to you from the live trading room, the one that has been in business for almost 5 years now. And then we also have a live options room, just started about 4 months ago, that you can add on at a discount price. Go over to drstoxx.com, click on the subscribe button, and you'll see all of that. If you want to learn how to trade, go over here to this menu, and you are good to go. All right, so I want to start off by talking a little bit about our wealth building portfolio. I was just telling the folks in the room. So we're trading a day. This is Monday, the 12th of May. Over the weekend, we had some positive news about China, and that a trade deal was at least being fleshed out, hammered out. The trade tariffs on China goods went from 125 to somewhere in the middle, down to 30 over the weekend. So, a very good step. And I think that's the kind of thing that Trump really needs to do all across the board with most of our trading partners in order to avoid massive diminishment of supply and huge increases in prices. Friend of ours, I was telling this to my wife over the weekend. Friend of ours has a business out in California where he builds pool tables, and all of his parts and pieces and so on come from China. And suddenly, the last 3 weeks, he's not been able to get anything from China. He can't get a pool ball, a cue, anything because of the tariffs. All the goods are sitting in containers somewhere in Hong Kong. And so he's been scrambling around trying to find a new supplier. He went to Vietnam to find some suppliers there, but their tariffs are 25%. He can't afford their products either. So, man, and this is a guy he hasn't been able to put a single pool table together for 3 weeks. Imagine you're probably selling 40 or 50 of these tables a day, and suddenly it dries up for 3 full weeks. That's a big problem, and that I'm sure is seen all across the board in all kinds of different businesses. So the sooner we get this settled, the better it will be for the American economy before we have to start seeing lots of layoffs and unemployment rate going up and our prices going way up and the stocked shelves going way down. Okay, but good news is we made big progress over the weekend. The market's pretty happy with that. It's not a perfect final solution yet, but it's a huge step in the right direction. The market's happy. Now, I was telling my trading room because we came into the week into Monday's trading today not very well equipped for a big old bullish gap higher. We had on some hedges because we were thinking that the market was pretty close to rolling back over again, giving us a bit of a pullback. The longs we had on were not of the type that really got a big benefit, big boost today. But we have this wealth building portfolio. It's a selection of stocks. We hold them for longer term. We buy into them in thirds. We tend to usually look for high quality, high value stocks that are trading at down at a level of support. We begin our positions there. It's been very, very successful. We started this back at the COVID crash. That was such an obvious place to start loading up on things like Tesla and Nvidia and Qualcomm and everybody else. And we did, and we made lots of money, and we've been just continuing this ever since. But we can only really buy on pullbacks. The tariff crash early April gave us that opportunity. So we did add in some positions there. We scaled into some new tranches and some of the older positions, and that's just how we do it. So it's nice to have this set of stocks in your back pocket when you come into a day like today, right? We might be missing out on some of our swing trades, but we're profiting very much from these longer term positions. See, the market's up about 3% and we're up almost 5%. We're being led higher today by, let's put this in order, Tesla up almost 7%. We had on some Tesla calls in the options room. We sold those out this morning a little bit early because Tesla kept going a little bit higher, but that was a beautiful trade. We've got Nvidia on, we've got AVGO, Qualcomm. The biotech industry was hit with some bad news over the weekend when Trump announced in an executive order that he was going to be slashing drug prices here in America. Good thing for us consumers, not so good for drug makers. And so that hit the biotech sector over the weekend, and then gapped down this morning and was pretty weak for a while. And then there was something else that came out, and I never did find out what that extra news piece was that was positive for biotech. I don't know what exactly it was, but suddenly our XBI position started to go back up again, and here it is up over 4%. So you never know. You just never know what's going on in the market. We have on Tom Lee's new fund, the Granny Fund, which got off to kind of a slow start, but it's been picking up slowly since then. We've got a payout, monthly payout of that annually is at 12%. This is a REIT income play. The theory there is that real estate will do very, very well once the mortgage rates start coming down, and they just haven't been coming down. But this is paying out over 12% now for us, about 1% a month. So we're using that as a nice source of income. We've got Chipotle on there that wasn't doing very well, but it is coming back quite nicely, and we've got a Bitcoin position which is up nicely. So we do have a profits in our open positions, and we do have a few that are still at 2. 3 is the max, so we can still do a few more buys if we need to. I do have my eye on a few new positions, just kind of waiting for the market to cool off a little bit, give us a little bit of downside risk reduction, and it hasn't done that yet. So we're just waiting on that. But all of that is to say that in the live trading room, not only do we do swing trades, we also have on these longer term positions. And I can show you, let me get back into the room real quick. I can show you the performance of this. Bring it over here. So under the room performance channel, I do keep track of our closed positions in the wealth building portfolio. We've closed 100 trades altogether since we started back at COVID crash, and 89% of them are winners, and most of these are really nice winners, right? Really nice. The biggest gains were right after COVID, of course, 3-digit gains in several of our positions. We've had a few misses along the way. Nothing extraordinarily horrible, but some stocks that didn't bounce back the way we thought they would. But for the most part, doing really well with that as an added means of benefiting from the long-term trend in the market, which is up, 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 up. Okay, now back to the charts. Let's take a look at. Let's take a look actually at the indexes today. So here we have a 5-minute chart of QQQ. The overnight gap is not seen here because we have to go, this is showing us pre-market data. We have to go way back to get to see that overnight gap. But you can see that right off the bell, right at 9:30, we had a big slam lower. It went from like 3.5% on the gap up to maybe 2.25% by the time we got down to these 10:30 lows. And it's just been all up from there. And you can see it's actually forming a nice, well, maybe that's the line right there. Nice trend higher off of that 10:30 low. And we're getting right back up to some of the pre-market highs. Look at this nice pattern here, right? I can't do this with a straight line, but there is like a little cup and handle on the 5-minute chart that's forming here for QQQ. And I think I had half a mind a couple hours ago to put us into some TQQQ just for a day or two. I'm a little bit leery about CPI coming out tomorrow. It is expected to go up higher because of tariffs, because of the supply chain getting disrupted. So prices, I'm sure will be they'll come in quite hot. But if the market has already priced that in, we should be okay as long as they're in line with expectations. If we're a tick higher than that, we might see some give back tomorrow. So that's why I'm a little bit hesitant to put on something like TQQQ even for an overnight trade. But once we get past CPI, we can see how the market reacts to that, and we can go from there. Because I do think that unless CPI is super hot, unless it's a huge upside miss, then I think we still have a good 2 or 3 days, perhaps, of some frothy euphoria on the China deal and any other deals that are supposed to be out there, because Trump did say that there were quite a few in the works. Here's a nice little bull flag, right? Bull flag, 5-minute chart, SPY. And another option for us is to maybe buy the micro minis, MES. So that's another option we can use to short-term trade. I really think at this point, let's take a look at the indexes. I think at this point that a lot of the upside, this is the weekly chart. Let's get back to the daily. A lot of the upside from the early April lows has been seen, most of it, not all of it, but most of it has been seen already. But there are some really good things happening, right? So we had this falling megaphone pattern, which I'm not even sure that's considered to be a pattern. But regardless of that, it broke out to the upside. We went sideways for about 3 days, a little bit up. We pulled back for a couple of days, and everybody and his mother got short. In fact, we hit the highest level of retail trading support. I'm sorry, a short. The highest level of shorts among retail traders since the COVID bottom. Retail traders are not known for making the best decisions with their money. They tend to sell at the top, sell at the bottom and buy at the top, and who knows what they do in between. So that's actually a bullish read that the retail traders are heavy short, as heavy short now as they were at the bottom of COVID. And that typically means we still have upside. In fact, we might have a lot of upside. The professional money managers, for the most part, except for today, now they're stepping back in. But apart from today, they've been pretty much on the sidelines, or they've been in safe havens. Gold was a big popular spot for that. Some of the, what do you call them, defensive plays, the cyclical, consumer cyclicals, and they're getting into oil, they were getting into bonds to some extent. And so all that cash has come out of equities and gone to these other places. And if the alpha is in equities again, they're going to come right back, right? Because they have to chase that alpha. They don't get paid if they don't. So if we get retail traders covering their shorts and big fund managers coming back into equities, taking their profits in gold and elsewhere, we're going to see a nice, healthy rally continue. I've been calling for a good, healthy summer, a decent, we'll probably get a swoon in September, we always do, and then a decent last quarter of the year. Whether we go up, whether we print another 25% year like we did last year, I don't know. Don't think so. Too much else going on in the market, in the macro. And I think the tariff situation has not yet been resolved. I don't think it will be resolved in the way the market really wants it to. Market just wants the tariffs to go away. Just stop talking about tariffs and let's move on and talk about other things. Don't think that's going to happen, of course. But if we can see some good deals out there that benefit both sides of the equation, then the market could be pretty happy, right? Pretty happy with that. We'll probably see sections of the economy do really well, sections do maybe not so well, and then everything in between. All right, the S&P 500, we regained the 20-period moving average. We are up here at the on top of the LRC. It's downtrending. This is typically where you start to see some weakness creep in, like it does up here. Whenever you get to the blue zone and a downtrending LRC, you have to watch out. That's the one technical thing I'm a little bit concerned about. And if we look at some of the momentum indicators like RSI and stochastics and so on, we're pretty much up there at that place where things tend to pull back a bit. So, but I have to say, from a pure price perspective, let's get rid of some of these lines. In fact, let's hide the LRC so that's not even a factor. We've got a pretty decent looking little breakout going on here. And we're above the March pivot high. We're above the 200-period moving average. We have a 21 cross over the 50. That's bullish. All this volume accumulation here on the way up is good, right? Above average. a lot of green days. That's exactly what you want to see. Now we are starting to get a little bit of, a little bit of weakness in the momentum. That was this little pocket right here, and then today, boom, right, right back up again. So that's why I think we've got a few more days, perhaps, of some of some modest upside to kind of price in this China deal and some hope about future. I'll tell you what, the other thing has to happen. Not only the tariffs have to kind of settle down, but we need to see some of these rates come down. We need to see mortgage rates come down, loan rates come down, consumer loans come down. If we really want to get back to a strong growth economy and get our GDP back up above 2%. Until those two things happen, I think we still are going to face some headwinds, so we can't get too excited just yet. We are above the March high, or are we? Yeah, we are just above on the MES. Now, can we get all the way back up to all-time highs on this run? I would be really, really surprised. Maybe we get to 6,000. That's a pretty hopeful number. 6,000, nice even number. And then we start to price in some of the headwinds. But I'll tell you what, it's a hold right here. MES is a hold. And I will let you know if I start to see, if we go down to the hourly chart, the 2-hour chart, we start to see some weakness built in, some heavy volume coming in, profit taking going on, I'll let you know. But I haven't seen it yet. Haven't seen it yet today. All right, look at this. This is very bullish. This is the NASDAQ, almost up 4%. Just a smidge off the highs of the session. That's the overnight session. We're right above the 200 period moving average after a nice little 5-bar bull flag. 21 crossed over the 50 a few days ago. Again, volume balance, very, very good. Momentum indicators exactly the way you'd want to see it, in a nice upward angle. We started to get a little bit weak on the momentum itself, but then right back up again with a fresh green, dark green bar today. And this is the cycle indicator, by the way, and it's kind of a mixed picture, I have to say. What we really want to see is this long-term cycle come down to lows and then roll back higher again. The last time that happened, it didn't really pan out all that much. But the fact that it's gone flat, hasn't pulled back down, suggests to me, at least, I'm not a cycles guy by any means. I'm just kind of playing around with this indicator, which is a proprietary one made by a friend of mine. That when we see a long-term cycle, especially, do what we don't expect it to do, which is to go flat instead of pulling back down into a low, that means the market's doing pretty well, right? Much better than the cycles themselves would indicate. Okay, so that's that. Let's take a look at the small caps. And the small caps, as we'll see, let me give you a better picture of this, because I posted this over on the StockTwits board. There's your dominant bearish trend line, that it has not been above that line in ages, and we could go way, way back, because this is a 2 to 3 year trend line off the all-time highs. We tagged it this morning, and here we have the small caps, I think, kind of paving the way for more of some mitigated upside, maybe a little bit of a pullback on CPI tomorrow, but it got up to a place where it could potentially break out, and it just didn't want to. So now small caps they tend to get exaggerated, right? So in a bullish market, they tend to go a little too high up. In a bearish market, they tend to go a little too low down. And if you're skilled at mean reversion trading, this is your index. You want to focus on the small caps. So a little bit of a concern here that small caps couldn't get up through that trend line. We're still well below the 200. We're just now getting potential of a 2150 cross. The volume balance in recent trading has been a little bit more mixed than it has. So there are some signs here in the small caps that we're not quite ready to party yet. But I'll tell you what, things look a lot better today than they did on Friday last week. So Bitcoin, we banked a nice 13-14% profit in a couple of days on Bitcoin. We held on through the weekend. Today it looks like it's giving some of that back. It got very close to all-time highs. All-time highs, you'd have to go to the actual index. This is just the micro E-mini, one of the contracts for the micro E-mini, but the all-time high's up around 111 or so. And we got to 106, I think, this morning in overnight trading, and it's been kind of all downhill from there. It's printing a bearish engulfing candle. Volume is pretty heavy. People are taking profits in Bitcoin today. Now, I don't think this is going to last. I think it's a temporary thing. Um, Part of this is that the dollar has been very strong the last couple of days, and it's up really high today. Let me show you the dollar if I can get that here. Where's my dollar chart? Let's just type it in. UUP. Yeah, look at that. Big gap up in the dollar. This, of course, is bad for gold. That's why gold is down so hard. Um, Sometimes a strong dollar can be not so good for stocks because it tends to make our products more expensive to foreign nations. But with the tariff thing going on and the trade imbalance going on, that might not be a factor. Now, we want to see the dollar kind of cool off a little bit here, not only to help stocks, but also to get some of the commodity plays back on track. And I think they will come back on track. I think this is just a little bit more of an aberration um, based on the China deal. But a strong dollar is not necessarily a bad sign for stocks. It does mean that the overall economy is doing okay, and that our country's goods are becoming very attractive, and people are buying more and more of it. And so then our currency goes up and their currency goes down. But um, let me see if I can get this trend line going here. So if we look at a trend line, well, actually, we are above it now. I thought we were right at it, but no, we're above it. So we're above the trend line. We're above the 50. The 200 is still way up there. And yeah, but personally, I have a position in gold, and I'm not very happy with where it's at right now. So I'm kind of hoping the dollar will cool off, but yeah, we'll see. Let's take a look at gold now that I'm talking about it. So oil is falling quite hard, and it got way up there today, coming back down again, and it's pretty stretched in a downtrending market. And here we don't have the LRC on, but you can see just from price that it is a sequence of lower highs, lower lows, and this is likely another lower high. And I think oil is going to roll over for a few days. Here's gold, and gold is right at, this is what I thought gold was going to do, right? We got off to the right start, and then we came back in for a couple of days, and then we tagged the 21 period moving average on Friday, reversed, gave us a nice bullish run on very good, on above average volume on Friday. Friday looked very good. And then we had the China news, and all bets were off. But it was a gap down, came down to test this former resistance, then support, right? It's an SR flip line. It held. We've bounced a little bit off that. It's not much of a bounce, but it is better than a breakthrough to the downside. So I do think that if gold can hold that line for a day or two, we get past CPI, PPI comes on Thursday, I think, then with that inflationary data, if it comes in, of course, if it comes in hot, we'll see gold probably catch a bid as well. But if it comes in really cold, if it misses to the downside, we'll probably see gold also continue lower. But if we do get some inline inflationary data, kind of keeping the Fed on check, keeping the Fed in more of a dovish posture with respect to the overall economy, then gold should do okay. But we're not there yet, and we have all kinds of other things that we need to worry about. So we've got yields still going up. And I know that Trump, one of his main concerns is that he wants to see yields come down. He keeps getting mad at Powell for not cutting rates. He says everybody else is cutting rates, and that's true. Over in Europe, they're cutting rates. In Japan, they're cutting rates, but just not doing it here. And Powell, I think he's looking at tariffs and seeing inflation, right? Well, I'm not so sure. Tariffs will raise prices, but that is technically inflation, but it's not inflation because of extra demand. It's inflation because of the lack of supply. So I'm sure he knows that. Of course, I'm not the economist. He's the smart guy, but for whatever reason, he is not. He's still playing kind of hawkish with respect to inflation, and a really cool CPI would help that situation a lot. Trump wants yields down, not only because he knows it will stimulate the economy, but also because they need to refinance the debt, which is getting too big to handle at these rates. All right, look at this breakout of a pullback. This doesn't, technically, this is a very bullish chart. So if you want to buy the 10Y, which is the micro E-mini for the 10-year yield, I would not kick anybody in the pants for doing that because this is a bullish breakout. We've got, let me get my little indicator on here, right? Sequence of lower highs, lower lows, lower highs. Okay, then we get a little bit of a pivot high, a little bit higher. I don't know if that's your pivot high right there or not. If this is the most recent pivot high, then that's still a lower high. We have this little ABC pullback, not a lower low though. So this is where things got bullish, right? A higher low, and then we didn't. I think we've broken out. Yeah, we're right at the most recent pivot high, which is a close above that level is typically a downtrending ending, and then you start to get a more of a bullish posture going forward. We don't want a bullish posture in yields. We don't. I don't. I want to see bonds skyrocket. I want to see mortgage rates come down under 4%. We're trying to buy another rental property, and we just, it's just not working because we can't come to terms with the lender. Anyway, so I'm hoping mortgage rates come down at least a couple of ticks. And anyway, it is what it is. We'll figure it out as we go. Okay, so those are the indexes. Let's take a quick look at the mags. We'll do these best to worst. So Amazon is up there on top. Wow, big jump for Amazon. Of course, Amazon is China, right? It is. Let's face it. Amazon and China are married at the hip. And so what's good for China is good for Amazon. And this looks really good, really, really good. So Facebook is up almost 8%. It is not falling off of the highs. It's up near the highs of the day. And we're starting to get right back up to a major S&R flip if we're not there already. No, we're just above it. We're just a tick above it on very good volume. Now, I like this. I liked it a lot better last week, and I wish I had bought some. I was thinking about it, putting us in the live trading room, into some FBL, which is the leveraged version of Facebook, but I did not, and now I'm regretting that. But here it is, a nice big pop-up. Apple has not looked very good. It's still not all that great. It had a bearish break to the downside of a rising wedge. It's been doing that all the way along. And here's a break, here's a break, and here's the third break. Well, maybe this higher low right here is the end of the downtrend, and if we can get back above the most recent pivot high, I'm not sure that's it, but it's somewhere there, we could see Apple catch a nice bid for the rest of the year, but we're not there yet. We're right at the 50-period moving average, and I don't know. It's still, to me, I'm not really that interested in Apple. There are better setups out there. So again, like I said, we had some Tesla. We had actually had TSLA calls, which are the leverage version, and we got out right off the open today. And right now, I'm looking at this chart. I'm kind of glad we did because it's been a falling off from the open. But we'll see where that goes. Still a lot of upside and a lot of good profit potential with Tesla. And Tesla has good news on the market forward-looking CAGR, right? I forget what CAGR stands for. Some of you probably know, but it's like the way of estimating a future growth potential of a new product line or new industry. And it's Personal Robot Optimus is a big part of that, right? Very good optimistic view of future profit. The downside that came out after the bell this morning was that the robotaxi for Tesla is having some trouble. I don't know exactly what the details are. It was good for Uber. We're long Uber in the room. Not so good for Tesla. We are long Tesla, but it's a longer term position. We have time to hold that one for a while. AVGO, really, really nice. We're long AVGO in the room. NVIDIA. We're long NVIDIA in the room. A little bit of a caution here. I don't want to go swing trade long NVIDIA because it's coming right into the 200 period moving average from below, and that's typically where things cool off for a while. We are long Qualcomm in the room. It's a kind of a gap and crap sort of day, so we'll keep an eye on that one for any worse problems. Google looks pretty good, but it's still below a lot. See how different, right? So, AVGO's up above recent pivot highs, less supply up there, rarefied blue air. Google's still underneath a lot of resistance. So if I had to choose between AVGO and Google, I would go with AVGO. It's not a buy way up there, but it is a good hold. Google is not a good place right now yet for a new swing trade. Let's see where it goes. Microsoft, well, it was way up on earnings. We had it in one of my services, and it hit our target price, so we're out of it now for a nice gain. But it just has continued to go on, still going up. Netflix is the only mag that's down today, and it's down pretty hard. It was a gap down, and it really looked ugly there for a while. Typically, when you hit, I think that's a new all-time high, and then you get a gap down, and if it trades below the low of that day, so if it trades below tomorrow 11:02, then it's in big trouble, right? That is a trading 101 short setup. I teach that in one of my books. Forget which one. I think it was the second book. The gap down open like this. It's a setup, a bearish setup, and Netflix is halfway to printing that setup. Now it could go back up and never touch that low and fill the gap and continue on to new all-time highs, but we'll have to wait and see whether it does that. All right, let me do this real quickly. I have a list of setups here that I've been keeping an eye on, and I just did update this a few hours ago. So let's see where these are. We talked about gold already. That's shiny, and this is the micro E-mini for gold. So again, not a buy just yet. We have to see that line hold, and then we have to see some bullish move in the opposite direction. We talked about Tesla, AVGO, PLTR. Not sure this is a buy just yet, but I like that it came down to the rising 21 after a disappointing earnings. It's bounced cleanly off of it. It's not having a very good day today when the market is up so nicely, so we'll have to wait and see whether that can change, but it is getting very close to all-time highs. All-time highs, right up here around 124. And we'll keep an eye. ARQQ is a cybersecurity play. I'm not sure I would recommend it. It's a tiny little float, pretty heavy short position. It's in the right sector, and there was some chatter about a possible acquisition, and then there was all kinds of call flow that came in last week, and I took some shares, and they've gone nowhere. Absolutely nowhere. Those rumors never really panned out. I don't know why everybody was buying calls. Maybe they know something that I don't know. They keep showing this earnings as if it's today, but it was on Friday last week. It was on Thursday last week, so no earnings coming forward yet. I don't know what's going on there. I just have a tiny little fun money position. I'm just going to hang on to it. We're long CFLT in the other room. We've got calls. It is a nice looking double bottom. Not exactly your most robust chart, of course, but it is in the right sector. I think software is that sector that's going, because of their broad margins, because it's not a hard commodity kind of retail trade where they have to buy everything from China. The software sector should do pretty well. This has very good growth. It is huge. All the analysts are way up there on their price targets, strong buy. They see something that the market hasn't yet seen. So let's wait and see. But it's an Adam and Eve bottom. So an Adam and Eve bottom is your most bullish double bottom. You've got a sharp V bottom and then a rounded bottom on the other side, right? Makes sense? Adam and Eve. And it needs to get up above the, this is an S&R flip, not just the fulcrum of the double bottom, but it's an S&R flip around 24.30, and we're down at 22.17. So, so it looks good. It looks good for that breakout. We're long CVX, Chevron play. It was just a simple push off of a bullish base down here, kind of a double bottom, and we bought it at like 138, 139, and it's now 141. It's not a big mover, but we're waiting. UPS is a thought to add to the wealth building portfolio. I like what it's doing. It built a 1 month base. When the market was falling on tariffs, it was going sideways, and it's in breakout mode today. We are long BMRN in the live trading room, and I like what it's doing today. A nice reversal off of a higher low. We're going to expect to see it get up above 64 for the breakout, and then that should get it back up to like the 200 period moving average. TNA we looked at already. XBI, this is interesting. So bad news out, as I said, over the weekend, executive order, higher prices, I'm sorry, lower prices. And then something came out during the market hours that boosted it back up. And here they are up 4.33%. We're already long XBI, but we can leverage this on a swing trade with LABU, right? So here's your thing. Here's your sequence of lower highs, lower lows, lower high, lower low, lower high, oh, a higher low. That's bullish. And it becomes really bullish if we can get back up above that lower high, 50, 62.35. And I think if it breaks that, we could see this back up to test the SNR flip here at 80. And it's only 52. So that would be a massive run. I like it. I'm a little leery about getting into biotechs since we already have a couple on anyway. But we're already in XBI. But as a swing trade, maybe just a little lotto play. And again, with this sort of lower low, you don't need to put the stop too far away. I mean, it is far away because it's very volatile, but around 44. Buy it at 52, short stop at 44, target 80. Hold on to it for a couple of months. You should be okay. A couple of China plays are in line here today. So this one is getting close to earnings. I'm not sure it's a trade, but I do like what it is doing as a breakout of this little wedge, right? Nice big move up above the 50 period moving average. China names are hot today because of the news. PDD, one of your best China plays, up above a little 5-bar flag. And but again, it's not functioning very well from the open today. And that's, to me, kind of a marker. If something is strong off the open and a gap up, it's very strong. If a stock gaps up and then pretty much trends lower the rest of the day, not so strong. Uber is in that latter camp. So we are long Uber in the live room, and it is right up against new all-time highs. Here's your old all-time high, 86.55 on a closing basis. And we're just above that right now. And you can see it's got some upside before it hits a trend line, but I don't think that trend line is going to last. I think Uber has played their cards right, and they, I just want to be in Uber for a while because I do think it's going to get into the mid 90s and maybe more than that. And it's off to a very good start for us today. All right, that's all I've got, and I am pretty much out of time, but let me take 5 minutes to do a few chart requests. So I will get back over to, oh boy, here we go. Okay. I'm back in the trading room, main trading room. I'm looking over to see if you are typing in any ticker symbols, and if you're interested, let's take a look at good old UNH, United Healthcare. Oh boy. Well, I've said this for a while now. It is a no-go zone. It was a no-go zone. I don't know when I started saying this. I guess it was on the earnings drop, because that's just ugly, right? If you get an earnings drop and on the day of that drop it rallies back up like this big green bar, that's not a bad thing, right? It means the market overestimated how undervalued or overestimated how overvalued the stock is, and they just overdid it. Then it rallied really sharply up into the next earnings. That's not earnings, is it? I don't know what that was. Some bad news. Big earnings drop here. That's just horrible. And it hasn't come anywhere near to filling that gap. And if it doesn't fill that gap, it's just a no-go zone. Stay away, sell everything that you have in that stock and move your money somewhere else because it's going to be likely dead money for a while. Now it might get some little dead cat bounces here and there. It'll show a little promising 3-bar reversal like it did here. What was that? About a week ago, a week and a half ago, right? Red bar down, doji, green bar up, but don't buy it. Just don't. When is this going to be a new buy signal? Well, I would say at the very least, it's got to get back up above this major SR flip here at 440. That was support for a long time. And the one thing I said positively is that when it hit 440 or it hit that yellow box there, which is just above it, and held on that horrible earnings day, it had the potential of forming a little base down there and then rallying from there, right from support. Well, it did. It right next day, right down through. So it's a no-go zone, I'm afraid to say. But I'm just trying to point out some signs that led me to make that decision from that day of earnings, right? Earnings typically, if it's a good stock and the market is overshot, it's going to rally back up and close that gap very quickly. And if it doesn't do that, just stay away, right? Don't even think about it. Don't even think about it. Okay, RH. What did I see about RH? Oh, it was Congresswoman Marjorie Greene, I think that's her name, was buying shares a few weeks ago, and her timing was perfect because she got in right down here at the bottom after earnings. She knew, for whatever reason, knew that Restoration Hardware was going to go right back up again, and here it is up. She's up about 30-40% from that entry. That's the only thing I know about it. It is up with the market today. Any sort of company like this that sells hard stuff, a lot of which is made in China, is going to benefit greatly from a China deal. So RH is probably a pretty good place. The home building sector is still not that great. We need to see rates, as I said, mortgage rates come down. When you see mortgage rates come down, you will see companies like this and Home Depot and Lowe's and Floor Design start to do really, really, really well. I'm not sure it's a buy right here. The fundamentals are a little bit dodgy. HIMS, wow. I mean, really nice run off of this rounded bottom. We were in HIMS a couple of weeks ago. I think we kind of got out like maybe on that red doji right there, which it turned out to be. It was a scary hold if you held, right? If you had it right here and you raised your stop, you would have been stopped out at the open the next day, only to see it go skyrocketing up. And yeah, and that was an earnings thing, wasn't it? Yeah, that was earnings. We got out just before earnings, I think. I don't normally like to hold swing trades over earnings. And it was not a good earnings report. I guess it was good, but the market didn't think it was good. It sold off overnight, and then it just rallied up the next day. So here's a good example. If you get a gap down on earnings that closes that gap on day one and even goes higher than that, that's very, very strong, very good. You want to jump on board something like that. I wouldn't buy it today. I would still hold it up here. I know it's a reversal bar. It might just come down for a couple of days, but I don't think the story here is done. And there's been a lot of big hedge funds plowing into HIMS. So I would just hold it. I wouldn't buy it today, but I would hold it. Let me see. Am I missing a few here? I did miss Hood. Let me go back and catch these, and then I'm sorry, I won't be able to get any more. So PEN, one of my faves. We're long this in the trend trade letter, and we've been long for a little while. It's not a real exciting stock, but it kind of goes up and then sideways, and then up and sideways. Very strong. It's from IBD leaderboard. They're in the stock as well. And I'm sorry, I don't know that much about the company, but it's a perfect chart. It's a buy. It's a hold. It's not a sell. That's the best thing I can tell you about it. And it's a very bullish pattern right here. This is a very bullish pattern. It's kind of like it's not quite a head and shoulders, but it is a continuation version of your cup and handle, right? Very bullish. Hang on to that stock, and I don't know where it's going to go, frankly. Mid 300s, I would say. eventually. Hood. Okay, so it's a big gap and crap day. That's not a good thing, but it's had a nice run, strong momentum, some good news coming out as well. This, I think, is a very good stock. If you're like a younger investor, I would buy some Hood, throw it in your back pocket, add maybe a dollar cost average in each month, but I would hang on to that one for a while. I think it's probably going to start to rise up and compete with some of the big old established Wall Street firms that are a bit stodgy and a little bit slow to uptick on the crypto. And it's just so user friendly. And my daughter uses it, and all of her college friends use it, and they love it, absolutely love it. They're doing sports betting. They're taking trips. My daughter just won $800 and something at the MGM this afternoon as a kind of birthday trip. But that's the mentality of this young, for good or for ill. I'm not so sure. I'm trying to keep my daughter on the straight and narrow path. But Hood has tapped into that young person trend of betting on sports, throwing some money at the slot machine, and throwing some money at the stock market. Hood and crypto, of course, is in the mix, and Hood is right there. I like it for longer term. It's not a buy here, but I wouldn't sell it either if I were long already. And let's do one more. ERJ. I don't remember mentioning this in a video, but I think it was a user. I mean, someone in the room mentioned it, and I looked at it as a request. So it's up on earnings. That's good, always good, and it is above the 50. The 21 is curling higher. We would like to see that 21 get above the 50, but it's getting there. Yeah, so I think this has some good upside still. Again, I don't think the market is going to go right back up to new all-time highs without some discounting, consolidation at the very least, if not a meaningful pullback. And this will probably do that as well. So your all-time highs up here above 56. I don't think it's going to get there within the next month or so. The way I would play this, I'm not sure if the options are liquid enough, but one of the things I like to do is I buy an at the money call option with maybe 2 months of time in it, and I'll sell an out of the money call option with 1 month of time in a trade like this, where you do have some good upside coming, but things might get a little bit squirrely in the near term. So you sell short, maybe something like the 53 or the 54 strike 1 month out. You put that credit against the cost basis of the long term, which is 2 months out, and then you hold that 2 months. You just hold both of them until expiration. So the cost basis is lowered on the short. The only thing that could go wrong is that it goes either way up, in which case you're still going to make profit, but it's kind of a capped profit, or it goes way down, in which case you're going to lose the premium paid on the long call minus the credit you got for the short call. Got to get my brain straight. So that's one way to play something like this, which has very good upside, still some potential, but maybe not over the next month. Let it play out the next month, earn some premium from it, and then your call, once that short call expires, your long call is free and clear, and you can enjoy the rest of the upside with the long call. Okay, I'm going to let you guys go. I'm going to produce the video, put a link in the main room, and then we'll continue trading the rest of the day. God bless everybody. Have a great rest of the day, and we'll see you back in the room in just a bit. Bye for now.